Welcome everybody, my name is 𝐏𝐨𝐬𝐬𝐬 and this is the Market Meditations podcast. We chat with fascinating people from around the world to extract mindsets, routines, stories and habits to help you build richer lives. Meditators, today's episode is with 𝐉𝐵𝐵 𝐸𝐻, the COO and co-founder of Coingecko, one of the rare companies that's managed to survive since 2014. Learn how they've managed to survive as businesses, as entrepreneurs, and also he's going to dive into how they managed to spot the early DeFi trend, how to maximize profits with yield farming, and a lot more. You're going to love this episode. Before we jump into this episode, don't forget that I send hand-picked market news, insights, and education to over 6,000 traders and investors 3 times a week. To get access to this, all you have to do is sign up to 𝐿𝐴𝐻𝐴𝐻.substack.com. Meditators, thank you so much for joining me for another episode of the Market Meditations podcast. I am so honored to have another incredible guest with me today. 𝐉𝐵𝐵, thank you so much for joining us.
Hi, good to be on the show, Kurush.
So 𝐉𝐵𝐵 is the COO of a company that has been around since 2014. Now, this is pretty incredible because it's very rare that companies survive this long. In fact, 𝐉𝐵𝐵, how many others are there that have been around since 2014?
Yeah, I think those companies that survived till now, you've probably heard of them, all the big names in the space like Coinbase and Kraken and most of the exchanges. I agree. It's definitely tough trying to survive during the bear cycles, especially in 2016, where a lot of companies sort of died during that winter. I don't know how many companies are there right now that still survive, but it was tough. It was tough. Market's very volatile, but I would say that a lot of companies that raised venture capital back in 2013 and 2014, they sort of raised and have a runway of 18, 24 months. And that runway is not sufficient to tie them over through the winter of 2015 and 2016 before the market picked up in 2017. I think we were sort of lucky to choose not to raise venture capital back in 2014. And we sort of knew that the market was going to be volatile. And we kind of kept our operations costs low and sort of like try to tide over the winter until 2017. I won't lie if I would say that it was easy. We were quite close to giving up as well. But when 2017 came by, I think things sort of improved month on month. And then we knew how it went with the ICO boom towards the end of 2017, 2018, and everybody made a lot of money. And the thing with us is we knew that crypto is very volatile. So after 2018, it would be another bear season again. It would be another like 2 to 3 years of winter. So we knew that we needed to keep cash in the bank and tide us over for the next winter. So that's what we did and kind of survived the next bear cycle and move on. Yeah.
But 𝐉𝐵𝐵, I want to dive into the minutia of exactly what was going on at each of those phases. Before we do, what was happening before Coingecko? What were you doing and how did you end up starting Coingecko?
Yeah, so I mean, Coingecko was kind of a side project for my co-founder TM and I. We have our jobs. We kind of heard about Bitcoin in 2013. I think TM heard about Bitcoin a few years earlier. Kind of dive into it. Was running sort of a crypto newsletter back then, and TM was sort of running. He has some like crypto POS, Bitcoin POS system, and we met by chance. And back then there were not that many people interested in crypto. We kind of got together and decided that we want to build something in crypto. So we brainstormed a few different ideas and thought that Coingecko was probably one of the ideas that we could succeed in the space. Websites back then were terribly designed. They looked so bad. They reminded us of websites from the GeoCities days. And this was in 2013, 2014. And you remember websites.
Why this early did you think, let's start a project in crypto?
I don't know. I mean, I thought Bitcoin was sort of revolutionary. And then back then, there was no Ethereum yet, but there were some kind of like the early seeds of smart contract platforms. So they were like BitShares and Mastercoin, now known as Omni, and there's a few other things that sort of have tokenization on top of this protocol. So I thought it was interesting, and you could sort of have smart contracts and do interesting things on top of it, and sort of like the new form of money. And we thought that, if some technology is going to change the world and going to have exponential growth in years to come, like Bitcoins or this crypto technology, blockchain technology might be something interesting worth betting on. So we decided that let's build something in the space that's for fun. If it works out, good for us. If it doesn't work out, then it doesn't matter because we still have our jobs. So we both kept our jobs, started working on Coingecko at nights and on weekends, and then started growing it. Eventually reached a stage where people kind of knew about us, and I think we only quit our jobs in 2017. So TM quit his job somewhere in mid 2017 and me towards the end of 2017.
So you guys built for 3 years before going full time.
Yeah. So I mean, back then, like it was possible to sort of grow. It was just the two of us and some contractors helping us out. But yeah, because we had our jobs, the cost of operations was pretty low. It was pretty much just server costs and some contractors that we had to pay to keep things going on. But yeah, that's kind of how we kept the light going. Yeah.
Was there much money in crypto before 2017?
It was enough to pay our servers.
It's rare we have a guest who was on before 2017. You guys are the proper OGs, so it's why I'm so curious about this period before.
There was no crazy ICOs back then. I think the biggest one that we were most excited on was Ethereum, right? Ethereum was the big, and it was exciting. There's a few other ones, but nowhere as crazy as it was in 2017. People were not advertising aggressively. The business model of Coingecko is advertisement, so not that many advertisers. I mean, it was enough to to pay the servers and maybe some extra money. Ramen profitable, if you want to call it that way. But yeah, it's just enough. Not great. And then 2017 came by and sort of changed the game, and there was so much money slushing around the space. But not just the money going around the space. Like we were surprised at how big the industry was, because back in 2015, 2014, it's just a really small group of guys. It was mostly libertarian people in the space, and 2017 came by and we saw how everyone, could potentially be interested. We knew it was going to be big at some point, but we just didn't expect it to come in 2017. So yeah, the market expanded rapidly. The ICO boom definitely helped everybody. Headlines, Bitcoin was hitting headlines on newspapers, media every single day. So yeah, the market expanded and there was sufficient revenue to be made, and we knew that if now's the time to kind of go full time on Coingecko and work on it and improve the product rapidly.
If the community changed from libertarians to, I'm guessing a lot of investors and all sorts of people came in 2017, how did the product change to match that?
I think at the start, back in 2014, 2015, when we started Coingecko, it was sort of, we try to do fundamental analysis, and we would sort of focus on GitHub statistics and social media stats, community stats using Facebook, Twitter, Reddit, and so on. I think over the years, we realized that most people. So one thing is when tokens were back in those days, it wasn't very easy to launch a coin. You sort of need to form a Bitcoin source code and deploy them. You have miners and also things. But when we have tokens on top of Ethereum, like it's so easy to launch a project, and a lot of these metrics that we track, like GitHub and social media, becomes less relevant. And a lot of people were sort of just trading. They were just interested in seeing how much money they made out of the price of the project. So I think over the years, sort of like pivoted the product and kind of tweak it in such a way that we kind of give people what they really want to see, and we sort of like started looking back into the traditional markets and see what aggregators are like in the traditional markets. So things like Yahoo Finance, Google Finance, and see how they place their price, their graphs, and their information, and sort of try to have some learnings from these websites and implement them on Coingecko. So yeah, all those things that we did was, I would say, some of the main differences between then and today.
Is that something you guys often do? Look to traditional market stuff and try and bring it over to crypto?
What we have observed is that a lot of things from the traditional markets are sort of being replicated in the crypto market. So we just try to learn from there as well. Everything in the financial market is being replicated in crypto. The product, we saw how there was a lot of derivatives trading in the last couple of years, and it all came from traditional market, and then options are becoming big over in crypto as well, and then leverage ETF are becoming big as well in crypto. It all came from traditional market. So a lot of things came from traditional market, and all these things, all this infrastructure are being replicated it was being replicated on the centralized exchanges first, but it's now being replicated on decentralized exchanges. So we start seeing a lot of these similarities. So I thought if these things are being replicated, like might as well try to see what we can learn and implement them and put in a crypto flavor and things that make sense for the crypto audience, because not everything in traditional finance makes sense for the crypto audience.
Of course, but it's a great source of seeing data that something works for people and then bringing it over. So good on Coingecko for realizing that and moving it forward. Was anyone else competing with you in 2017? What was the market like specifically for what Coingecko was doing?
Yeah, I think the biggest competitor then and now has always been CoinMarketCap. That being said, like back in 2014 and all, it wasn't just CoinGecko and CoinMarketCap. There were several other data aggregators around as well, but some of them just couldn't improve their product, or couldn't market themselves well enough to the community that they didn't have enough traction, and you don't hear much about them today, or some of them have died off as well. But yeah, I think one of the things was, so we were a few months later to launch than CoinMarketCap, and I think one of the things is because we were not full time on this in crypto, and we didn't really have too much time to also market and improve the product. So I think CoinMarketCap sort of have that early advantage and solidified its lead, and I think it sort of built up a very strong lead going into 2017. We were sort of like, we benefited from the growth of the market and saw a huge traction in 2017 as well. But I think starting from 2018 we started starting from 2018, we started improving the product rapidly and trying to compete. And I think our efforts have bore fruits. And 2020, we really saw like a lot of people, especially in the Ethereum space, has sort of switched to CoinGecko permanently, and because of all the efforts that we put into DeFi and so on.
Yeah, for sure. CoinGecko has got a lot of features on DeFi which are hard to find elsewhere, especially in the incredible way you guys present it. Now, before we go over 2017, because I'm systematically breaking through this CoinGecko journey, why didn't you said 2018 is when you started really going hard on CoinGecko. Why not in 2017? Because I'm thinking if the market's so exciting, a week in 2017 is probably like 3 weeks in 2018 in terms of reward for what you put in.
I think we had some obligations and all, and at the start it wasn't so easy to sort of. I think 2017 was sort of us trying to keep the lights on. We had so much traffic that the website was just constantly failing, and there's so many new coins to add that we're just constantly firefighting, keeping the website up, adding new coins and so on. And we just didn't have much time to hire people to sort of help improve the operations. So 2018, we sort of have some breathers, started bringing in one guy at a time and growing the team. So that's when things started getting more systematic. Otherwise, things was really chaotic in 2017. It was just madness everywhere, trying to grow things.
Now, that's something I'm going to dive into, growing the team, because I am fascinated by how people in crypto grow their teams and what processes they use. And I know CoinGecko did something really unique. You guys don't hire people who aren't local, correct? Like you have to have people on site. You don't get remote workers.
Yeah, so we maintain an office in Kuala Lumpur, Malaysia, and I mean KL, Malaysia is where TM and I are from. So we sort of prefer to hire from Malaysia. We haven't. I think at 2017, 2018, we sort of were at a cross point of whether we should hire people remotely or all around the world and kind of don't have an office, or sort of maintain an office in KL and start to hire locally. Our first hire happened to be our friend, and he wanted an office in KL. So we got a co-working space, and then I think that's kind of how it all got started. Like once we have some guy in the office, realize that we could be more productive working together instead of working from home remotely, So we kind of started hiring a second person, third person. Before we knew it, we sort of have an office. At this point in time, we sort of kind of want to maintain it that way. I mean, COVID obviously has made most of us work from home, even though we're all in KL. But
Yeah.
I think we don't know. Maybe at some point we will start hiring internationally. But at this point in time, still can hire people from Malaysia to grow Coingecko. So that's kind of where we are at this stage.
And this is actually almost something I'm thinking of right now. We're actually a remote team, and I'm trying to bring everyone in one location. What sort of productivity increases did you see with everyone being in one location? And do you think it's worth the opportunity cost?
So I mean, different teams have different way of working. What we found was that working together, like discussions were a lot easier to conduct when you are face to face, and working together in one location. You sort of build this sort of like what's this word, team synergy with the team, and kind of good working relationship that you cultivate because you have lunch together, or you have drinks after work, or maybe you play a game of futsal after work that you can't really get when you work remotely. Because when you go on a call, there's always a set window, like 1 hour, and you kind of want to, or half an hour, and you want to clear. It's always about work. You don't really talk much about non-work stuff. So building the team, the team around it is not to say it's impossible, but it requires a certain level of a different set of skills to build that ability for the team to work close together. I know a lot of teams have done it, but I mean, there's nothing wrong with it. I mean, and I think a lot of people will move fully remote after this as well. I mean, people are already moving fully remote at this point in time because of COVID. But yeah, but I think there will always be a blend. Like we sort of prefer a blend of like working, of having having discussions in person and all.
Yeah. As COO, is that your responsibility? Because that sounds like operations of the company, like whether it's a remote, whether it's together. Is that something you're actively thinking about? That was a very deliberate decision the company made.
I think I discussed this closely with my partner TM, and basically what TM leads the whole engineering team, and I lead pretty much everything non-engineering in Coingecko, and there's no hard and fast rule. I mean, if we just go what works best for the company. I think at some point we'll probably have like people working remotely. The thing about remote work is that once to have remote work go well, you need to have the tools in place. So you need to have the proper project management tools. We use Basecamp over here, and you need to have the proper communication channels like Slack or some of the things. Sort of like asynchronous communication becomes quite important, because otherwise you keep like pinging your colleagues on Slack and expecting answers immediately. But yeah, a lot of documentation is required for remote work to work. If not, then face to face, you don't really need to document a lot of things, because you can just sort of ask simple questions to your colleagues next door. But yeah, things may change. Yeah.
That definitely covers that. And kind of leading on from that, you guys, I'd say you're one of the fastest people in terms of developing the product in the market. People struggle to add features as fast as you guys do. And that execution, I'm guessing, is a lot. Well, it's got to be operations. It's got to be you guys running smooth, running lean. How much of an edge does that give you? How important is it to be the first mover in the space?
I would say it's quite important. I would say this space moves fast, and if you want the first to understand it and track it, you definitely get a lot of advantage in the space. I think having a small team works to our favor, because sometimes people say big is better, but when you have big, you have a lot of team issues trying to decide what to do and all. But I mean, we're sort of growing the team, but we should see like if we go through growing pains as we expand the team. But the small team works in developing, in having a focused attention, developing certain features and all.
Yeah, I had Sam from FDX on, and he was saying the exact same thing, that people really underestimate how much a small team can do and the huge speed advantages you get by trying to stay small as long as possible.
Oh yeah, it's interesting that Sam said the same thing. Because we definitely felt that, like, just by the fact that we were lean and we were small, we could just execute fast because everybody agreed that this is the thing that we want to achieve, and everybody went out and achieved and set out to complete their parts to achieve the goal.
For sure. Then, kind of to round off the journey of CoinGecko before we dive into what's been happening more recently, if we could go back to 2000 and say 14 and restart the journey, what were the biggest mistakes you guys made? What were the best decisions you guys made? And what would you change if you could go back?
I think just being more into the community, talking to more people in the community. We were in the community, but we were not as aggressive in community building back then, I suppose. And if we had talked to more people in the community, made ourselves known, I think we would have learned a lot of things that we should improve back then, and would have done it earlier. I will also say that because I mean we were based in Malaysia, I should have made a trip to New York for like consensus back in 2014 or so, like because it was kind of small back then. Like everyone kind of knew everyone else, but we were just building by ourselves in some remote part of the world, and nobody really cared about what we did. And I think knowing some of these guys back in 2014 would probably help us a lot. But I mean, we survived, so I have no regrets. I mean, I have to look back. I mean, these are things that could have been better, but like everything turned out quite well so far. So not much regrets.
That's a very interesting thing to hone in on, just networking more, which is very interesting because it's the importance of product versus marketing. How much of CoinGecko's success is the quality of the product, and how much of it is the marketing side?
Yeah, I would say both are equally important. If you have the best product, but you can't communicate your product's advantages or benefits to your users, then your users will know what you've done or what your product can do for them. So it's not as good. Yeah, you can't succeed with that marketing part.
Yeah, it makes perfect sense. And then that comes into the more recent period, which is you guys survived the 2018, 2019. I think a big advantage is you guys were pretty independent. You didn't have investors, you didn't accept external funds. Besides that, how did you guys survive that period? Because there are a lot of crypto companies coming up right now, a lot of new companies being built in the space. And obviously, the excitement will at some point phase. There will be a quiet period. What advice would you give to people who are building in the space and want to survive those sorts of periods?
So a lot of people, they raised money in 2017. They thought money was so easy to come by back then. I mean, it was crazy thinking that the average ICO would raise around $20 million. If you raise less than $20 million back then, considered sort of a failure. And you have companies raising 50, 100, 200, $1 billion. Like, money was so simple, and when money was that simple to come by, you don't feel the sort of pain to sort of be careful with your money. And a lot of these ICO teams that raise so much money, they sort of just splurge them on parties, on fancy offices, and over hiring people. And when you overhire, you knew what happens. Sometimes it's hard to move
Mhm.
fast, and you hire wrong because you were fast. You want to hire a lot of people in a short period of time. So you end up hiring the wrong people, and then you have a lot of people management issue, because you have to kind of fire them and sack them, and then people don't perform, and all kinds of people issues. So um, I would say that I always tell teams that if you raise money, like treat the money like it's your money, and don't sort of overspend it. Like you should not try to expand the team as fast as you think you should. You must be very careful with like who you hire, because I mean you can do a lot of things with very little people as well. As we have seen with many teams in crypto space, like a lot of them don't have big teams and they have achieved a lot. So yeah, that's what I would say.
So treat the money as if it's your own. Be careful with it. How much runway do you think, as a general guide, a company should have, or are there too many variables to give a general guide there?
I would say, I mean, in typical tech fundraising, you raise 18 to 24 months of runway. But I think in crypto, I think that's kind of a bit too short. You probably want to keep like 36 months of runway if you can, because if you look at the bear cycles, they last between sometimes up to 3 years. So if you run short of money at that point in time, then that's tough, I would say. So I think 36 months I think you should tide you over. And a lot of VCs don't understand this. And when you raise money, like, you sort of like expected to spend the money on marketing. But during a bear market, no matter how much money you throw at advertising and marketing, you just can't grow the metric because it's a down cycle and everything's going down no matter what you do. So you're just gonna be hustle down and build. I think also teams should also kind of be nimble and flexible. Crypto sort of worked in cycles in teams. So we saw this year everything's about DeFi, right? So teams that managed to capitalize and work on DeFi projects sort of saw a huge increase in their valuation. I think the biggest change was biggest performer was Aave. Started out as ethLand, kind of changed their product quite significantly from what it was to what it is now. And we know what the story of Aave right now. So yeah, just by being nimble and pivoting your product when you know it's not really working, I think that sort of has a lot of value.
Yeah, instantly responding to feedback and iterating, solid advice there. Bobby, then what was the tipping point? When did the bear market from 2018, 2019 transition for you guys? And what was it like? How did it happen?
I think we really enjoyed the bear market of 2018, 2019, because we were sort of just starting, and a lot of our infrastructure were sort of, there's so much technical debt on our side because we were kind of building for like from 2014 by the side, and we just like hacked through a lot of things and kind of make things work on the front, but on the back it was kind of messy and a lot of things that requires pretty heavy lifting. So the bear market of 2018, 2019 was a good time for us. We sort of have some time to build peacefully without crazy markets making us busy with things. And we managed to fix all those infrastructure problems, we were basically building this website for 2020, like when the masses come in, 2020, 2021, when everyone started coming in again and the website need to handle like millions and millions of page views. So all those things are ready. So yeah, basically that's what we did in 2018, 2019.
So built the pitch wheels and you just grew with the market then?
Yeah. Basically building the right foundation. The bear market is great for you to build the foundation for your project, because during the bull market, you just don't have time. You just basically firefighting every day. I mean, in Coingecko's terms, adding new coins, adding new features and so on, but like different projects will have different things that they're firefighting. But during the bear market, like nobody's out there disturbing you. You have some peace in your chat groups and all. Like you can really sit down and concentrate on the things that you want to do and plan for like the bull market in the next few years.
Well, you say that, but there's now the Coingecko Ventures arm as well, isn't there?
Yeah, so we started. We talked to a lot of DeFi projects, and I think this year we start seeing some of them opening up their projects for pitch. For investment, and we set up a ventures arm and started investing in some of these projects. So it's mostly DeFi projects, and I think it's quite interesting. We have a few different projects that we took part this year, mostly in DeFi. So projects like Serum, Frontier, APY Finance, Dune Analytics, Zapper, Dodo, Covalent. So yeah, these are some of the DeFi dollars, some of these projects that we participate in, and try to do our best to sort of help and grow these teams as well, but what we can, and share our advice where we can with these teams. But yeah, that's how Coingecko Venture started.
A question there then, Bobby. I know you said before that it's been very important to keep Coingecko very separate from having any sort of bias, correct?
Mm-hmm. Yep.
How does that work with also having a venture arm? Because obviously there's going to be some sort of vested interest in the companies the venture arm gets involved in.
Yeah, so a lot of these projects, they're token projects. So what we do is there's not much information that we could have biasness anyways. Like most of the information on Coingecko is just price, trading volume, which are sourced from exchanges, and maybe the circulating supply and market cap, which we get from the teams. And it's the same guidelines, same metrics, same way of evaluating all these different projects that we put when compared to any other projects in the space. There's not much things that we could sort of display in a non-biased manner for this project. So that's kind of how we look into it. Yeah.
Then what sort of biases are you trying to avoid with Coingecko?
I think a lot of the biasness, if you look at, is with regards to exchanges, right? So the exchange volume, especially, there's a lot of like wash traded exchanges. So it used to be a case where trading volume was sort of the way aggregators rank exchanges. In a traditional market, that's how it's done as well, and that's not a problem because nobody's out there trying to wash trade and fake their volume. But in crypto, there's no regulations. So I've pretty much reached we've reached a conclusion to say that basically any exchange that is not regulated, their volume is suspicious, I would say, because there's no repercussions to putting out fake volume. So we reached a stage where we can't really rely on trading volume, and we had to sort of use multiple different metrics to sort of evaluate these exchanges, and this we kind of use a formula which looks into web traffic, order book, teams, API scores, and so on. And then I think, so we try to the hard part is all these things becomes sort of an art because it's kind of the formula that you use to determine which exchange gets a 10 point or 5 points is sort of like an art. There's no right and wrong answer.
It's discretionary, yeah.
Yeah, and we kind of have a formula, and then we try to put every exchange on that same formula, so we don't try to be biased on that sense. So we have some exchanges that we invest in. They're all mostly decentralized exchanges. We don't really have a DEX kind of. We put them onto the same trust score algorithm as well. So we don't sort of add there are aggregators out there, mostly Chinese-based aggregators, where it's quite well known that the more you pay these people, you can sort of change your rank. Whereas we don't do such things. The ranks are all based on a formula that's applied to all exchanges equally. So yeah.
And that would make sense why it doesn't matter who's on the venture arm, they still go into the same formulas,
yeah,
correct?
That's right.
Well, then to scoot back to the venture arm, what do you guys look for in DeFi projects you like to invest in?
I think we look for projects, ideas that that will push DeFi forward, right? So, if you come to us with another idea that, hey, I want to build a YFI clone, like a yield aggregator, like we've already invested in one, and then like that may be interesting maybe 6 months ago, but if you ask us like now again, like maybe not so. So things change. So it's always trying to push the next step in DeFi. What's next in DeFi, and how can we help, and what's interesting in DeFi after that. So it changes, and we look for. I think because it's early stage and seed, a lot of our decisions are sort of based on the team. So we want to see who are the guys behind it. Are they just a copycat team, or do they have the skills and the hustle to build out this project? Can they make it succeed, or are they just there to raise money, easy money, and then just build and then don't deliver on a project? Because we have all seen our times, right? Back in 2017, so many projects raised money so easily, and then the tokens just went down 99% in the next couple of years, right? We don't want to be
CEOs getting paid 35K a month and no product coming out,
and private jets everywhere. Definitely not the kind of guys that we want to bet on.
For sure, and that's why I was actually a little surprised you mentioned idea before you did people. So do you value in DeFi specifically ideas quite a lot? Because most people instantly go to, I care about who the founder is and who the team are that's building it.
I would say both are equally important. If you have like the best team building on an idea that is not so interesting, then doesn't interest us, then we won't go for it either. Yeah, so both.
Do you have an example of that, Bobby? Of a great team and a mediocre idea that couldn't be executed?
I don't have right now off my head, but normally bad teams usually have bad ideas.
Very true. It's hard to call a team great if they're all working on a mediocre idea, but fully see what you mean about that originality, that pushing DeFi forward, because I mean, on so many levels, it's important. So, Bobby, do you yield farm yourself? You're investing in the DeFi projects, but are you getting involved in DeFi?
Yeah, of course. I mean, the only way to learn and understand DeFi is to participate in it. If I don't yield farm, I don't participate in all this farm, if I don't get a rug pull, I don't, it's hard to say I truly participate in DeFi. So yes, I do participate in yield farming. I do it at the start mainly to learn, but then the yields were very attractive there. I started doing it more aggressively just to grow my portfolio as well.
Mhm.
Yeah, so yes, I think it's interesting. It is important to participate in them because if we don't, then we won't really know what's going on in the space. So we are active participants.
How do you participate? And this is let's get some alpha for the listeners. Where's a great way to make money off of DeFi right now, in your opinion?
So I mean, I I do I I do some use. So the profitable farms change from time to time because the teams tweak the parameters and all, and then it depends on how much funds are flowing into each different yield farm. Um, so I mean, it changes every week or so, but like some farms are more stable than the rest. So for
Yeah.
example, I was pretty aggressively farming on Uniswap when they had a liquidity mining program. It was sort of one of the safer pools, and the yields are not great. I think it was around 10-15%, but it was you don't have much headache. You just put your money there and then it sort of grow. I mean, 15% is better than what you have in the bank anyways. And then now I'm sort of doing it with SushiSwap. So Vampire Mining Attack, and kind of it was a one-click button, and I just basically moved everything from Uniswap to SushiSwap, and that was quite useful to see how Vampire Mining work in work life, and see how it goes. I think some of the interesting farms that I'm doing right now is also on stable coins. I'm doing some on Bun_Bridge. You can put on Bun_Bridge.
One breach. Interesting.
Yeah, and I think I'm also so for ETH, I'm growing my ETH using Alpha Homora. So it varies the ETH interest rate. I think if you put on ETH2, if you stake on ETH2, you get about 15% right now. But on Alpha Homora, it's anywhere between 7 to 20-30% of to growing your ETH
Nice.
APY. So that's not bad, I would say. Because you get liquidity, you can withdraw it anytime. I think 𝐏𝐺𝐬𝐬𝐬 is pretty interesting as well. So you can contribute either ETH or a WBTC pool, and you can kind of grow. You get 𝑟_𝐏𝐺𝐬𝐬𝐬, which you can keep up to a certain point for 𝐏𝐺𝐬𝐬𝐬, or you can kind of sell it for WBTC or whatever you want later on. So there are multiple different pools. I think a lot of people I know are farming on Saffron as well.
Mm-hmm.
So I was doing that for a while, and then the funds got stuck, and then I didn't really go back once I got my money out. But I think it's interesting what they are building. So I think I'm paying a lot of attention to projects which are trying to convert variable interest rates to fixed interest rates in DeFi. So projects like Bun_Bridge, Saffron, and I think there's a few others coming out as well. A lot of so I think that's probably going to be the next frontier for DeFi at this point in time. Seeing these projects go out and get like, because if you can get like fixed interest rates on your USDC, for example, then you really would like to move all your money from your bank into USDC and just grow there, because why not, right? If it's a few percentage point, and a lot of people from traditional will see this benefit and move into DeFi as well. And then all the degens will go for the super high yield.
Oh my God, the other day I heard about someone whose specific trading strategy is 6-figure positions in vetted out high risk liquidity pools, and they throw in stuff like up to 3,000% APY, and they leave it in there for like 1 to 3 days, take it out, and then they've made like 30%. It's ridiculous.
Yeah, I mean, those things you have to be really careful, and you have to know like the contract's kind of safe as well. And if you can read the contract, good for you. But a lot of times, most people don't know, and there's a lot of effort trying to maintain. And when you put large amounts, and then you probably can't sleep as well at night as well.
Oh yeah. The stress is immense, and like you said, most people can't even come close to vetting out a project.
Yeah, I wouldn't recommend that for most people. I mean, I kind of like projects which are sort of like vetted out, which have a lot of money in there, and like they're kind of safe and have like strong teams working behind it. And you know, you can sort of sleep well at night knowing that your funds are safe. Yeah, and I value that sleep, man. Like if you can't sleep and you don't know when it's gonna get rug pulled, like that's not so fun. Yeah.
It's that balance of like money and stress, because I value my sleep just as much as you do. Bobby, I actually gave myself insomnia because in 2018 I was so obsessed with scalping and trading this one great system I built on the 5-minute time frame that I would wake up 6 times a night to alerts just to go trade. It was horrible, and I've still got some insomnia because of that. I struggle to sleep perfectly throughout the night, so health over that any day, and anxiety and just keeping your mental state clear. Those high risk projects, especially with huge sums of money, can be really damaging to a lot of people. I mean, you've been in crypto so long, and it can get at times to the point where it's expensive to sleep. Like sleeping in crypto becomes expensive. How do you balance that? Have you ever suffered with that?
I mean, you just make do with it. Like, I mean, I'm fine with not making the extra X amount of money because I want to sleep. I mean, if I lose out on opportunity just because I sleep, I'm totally fine with it. I mean, at the end of the day, like if you don't get the sleep, like you lose out on some other thing, because if you don't get a good night's sleep, then you can't really focus on the next day as well. And that will, and if you do this repeatedly over a period of time, then that will have an effect on your mental age during your day trading or your work or whatever. Then that's not good, right? So I just like, okay, fine. I mean, I don't have to chase every opportunity. You feel bad missing out on some of the wins or selling out too early, but that's fine, right? Like that's life. As long as you make, I mean, the fact that you are already earning crypto is really very good. Like, so I kind of like look at it and compare, hey, if I'm not in crypto, I'm earning somewhere else, investing in like some other investments, other asset classes that don't return as good as crypto. Like that's much worse, right? So I mean, it's already a big win to be in crypto and having all these opportunities in front of us. So that's good for me.
You brought it up, so I'm definitely going to go there. Do you invest anywhere else besides crypto, or are you 100% crypto?
No, I mean, I have some in the stock market and some real estate. It's just to diversify because I've been in crypto for so long. Like, I mean, and my initial portfolio in crypto was small, right? Back in 2014, it was that cheap to buy anything. So I didn't have much money back then, but whatever money, I just put a small amount, and it sort of kind of snowballed to a large amount, right? And then it was kind of, I don't know, just diversify into different asset classes here and there and just go with it.
Are you comfortable sharing your split, like roughly how much you're in crypto? You can even give us a range, percentage wise, and how much out of crypto, and where else you go.
I don't really have the numbers off my head, actually. Yeah, I have no idea. Yeah.
I mean, this is just me personally asking. So do you not track your investments? Is it just more just build?
I mean, yeah, I don't really track too closely. I'm starting to trade some of my trades these days, just because I don't really trade that much in crypto back then. I mean, it was kind of a buy and hold kind of thing, and these days I'm trying to hone some of my trading skills. So I think having a spreadsheet with your buys and your sells and why you buy and why you sell, I realize is sort of important, because otherwise if you don't maintain like a logbook, you don't have the discipline, and you end up buying weird shit coins for reasons you don't even know later on why. So yeah, I started maintaining a logbook. I think that's helpful to track.
Huge. Also, you get some past data, because a lot of people just trade unprofitably, and they'd be so much better off not trading and just investing in certain things. And if you don't have data to show that, you'll just never know.
Yeah, I mean, a lot of the debates for us back then was like, do you trade or do you just buy and hold? And in a lot of cases, just buying and holding BTC and ETH for a long period of time is just a lot easier. There's no stress and returns a lot better than just trading all this shitcoin. Unless you know what you're doing, then you trade. But otherwise, for most people who have a jobs and all, you don't want to have stress, you don't want to look at the markets every day, just, I don't know, just buy Bitcoin and Ether and just hold for 5-10 years. And I think in most cases, you will do pretty well.
I agree, but until you don't. You'll do pretty well until it's that final round of the bubble, and then it comes back down and starts floating and matures as an asset class. I guess that's the one advantage of trading. Like, you are taking on a lot of risk when you're just buying and holding no matter what through 80% drops or whatever it takes.
I think the hard part is, like, especially like large assets like Bitcoin and Ether, it still goes down like 50-60%. That drawdown, like from like 20,000 Bitcoin, 20,000 to $3,000, that's a massive drawdown. And if you look at the markets every day, you would feel a lot of stress. I mean, obviously, it's better if you sold into USDT and buy back at a lower price, but it's hard to time the market. And I mean, if you're full time, then maybe you can time the market, you can sort of see things better. But I don't know, like sometimes if you want to, I mean, there is value in not buying and trading every day and just holding, and because you get there's no stress if you don't care, if you just buy and hold and you just focus completely on what you want to do. And for us, for me at least, is focus on growing Coingecko, and some other people focus on growing their companies or their work at their jobs. And if trading is not something that you're good at, like, maybe that's not what you should focus on. I mean, again, of course, you can be good at trading. It's not an impossible skill to learn. You just need to know what is the right position sizing, what is your risk appetite, what is all the skills. Read the chart, learn at least some basic TA, where's the support and resistance. Otherwise, you don't know what you're doing. Otherwise.
I mean, I've got a free course, which is one of the most popular things my audience comes to me for, to teach people TA. Where did you learn TA, Bobby?
I just Googled and just read tutorials, watch some videos and learn.
Oh, yeah?
I think the problem with trading is a lot of people want fast money and they don't want to take the effort to learn, but they just want to see the profits. And every time they buy, they just hope that the price will go up. And using hope as a strategy is not really trading, it's more gambling, I would say. And if you don't know what you're doing,
entirely.
So yeah, I think a lot of people don't want to take the effort to learn, but if you do take the effort to learn, you can be good at trading if you learn.
For sure. Bobby, last thing I want to talk about is Coingecko. You guys put out a book on how to DeFi. Could you tell me a little bit about this book?
Yeah, sure. So I think at the start of 2020, we were active in DeFi and all the DeFi projects and all, and we thought that, hey, no one's ever written a book on DeFi yet, and would be good to kind of educate everyone that we know about DeFi, our community in Coingecko. So we sort of put together a basic beginner's guide to DeFi and kind of look through some of the biggest projects in the space, like Synthetics, Compound, and Put Together, and so on, and kind of have a step-by-step guide of how to use these projects. So that's what we did. We put together a book, and it kind of was like 25,000 words or so, 200 pages, I think. And we published it sometime in March early this year, and kind of give it out for free at the start. And everybody sort of liked what we did. It was really the first DeFi book ever published. And after that, we didn't know that DeFi is going to be big. The rest is history, right? The rest, DeFi suddenly took off this year, and I mean, the book that we wrote in March is sort of outdated by now, because so much has happened in DeFi that we are planning and working on a new advanced and updated version of the book. Because back when we launched, there was no yield farming and liquidity mining. Compound kind of kickstarted everything in June. So a lot of things needs to be updated on the book, and that's kind of what we're doing. And hopefully we'll get the new book up in 2021.
I'm actually really excited for that new book. I saw it, especially just an easy step-by-step guide on how to get more and more involved in these different areas of DeFi, because it's quite intimidating for the average person, because while the APYs are ridiculous and attractive, most people are too scared to start moving around those sums of money in unfamiliar places.
Yeah, they are risky, and I don't know, like for beginners, like I wouldn't put I always tell people when you enter crypto, you should put money that you are willing to lose. So if you are willing to lose the entire amount, like if it's worth zero to you, then there's nothing to be worried when it actually goes to zero, right? But if it goes to something like 2x or 3x, then everything else bonus, right? And you always try to take your capital out, and then you're playing with house money, right? After that, yeah.
I absolutely love your humble approach and your self-awareness. You seem to be very deliberate about not just monetary ROI, but psychological ROI on any action you take or business decision you make, which is awesome. Bobby, this has been fascinating for entrepreneurs, upcoming DeFi yield farmers, traders, and investors. Thank you so much for joining us. Is there anything you'd like to leave our audience with before you go off, even if it's just a goodbye or a little bit of a mantra, some advice for them coming into crypto as anything from entrepreneur to trader?
I think just never stop learning, because this space moves so fast. Like even here at Coingecko, like I take my weekends to read white papers, because if I don't read up, like I will be outdated. I'll be a dinosaur in 1 year time. So things move really quickly in crypto. So and any beginner that come into the space, if you read up and you join the community and you learn about the project, there's so much opportunities in this space. So yeah, never harm to know more about particular project or things in the space.
What a fantastic outro. Thank you so much for your time, Bobby. And meditators, I'll see you again for another episode of the Market Meditations Podcast. Thank you so much for tuning in to another episode of the Market Meditations Podcast. If you enjoyed this episode and you'd like us to continue bringing you fascinating people from across the world, please leave us a review on Apple Podcasts, Spotify, or wherever else you like to listen to these podcasts, and share the episode with a friend. If you have feedback or an idea for a potential guest, reach out to me on Twitter at 𝐿𝐸𝐴𝐾, and do not forget, we write a newsletter covering all important topics in crypto and traditional markets. We send it out 3 times a week, the Market Meditations newsletter. You also get early access to these episodes, and you get transcripts and extra notes as well. So make sure to subscribe there as well.